Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong move off of yesterday's VPOC up towards yesterday's overnight high. And at this point, the market is very balanced heading into the open, and it can really tip in either direction. Short term, we're going to be using the 69 quarter to 71 quarter area as the micro bull bear zone. As long as ES is holding above that zone, we know that short term, the buy side still has a chance to step in. On the upside, the primary resistance is 78 to 80, and a breakout above 78 to 80 would confirm that now buyers are back in short-term control, and that can lead to a directional move up to 86.5 to 88.5 and potentially 91.93, and responsive sellers can still be active at both of those resistance zones. The only thing to keep in mind on a breakout above 78 to 80 is that it would be a balanced breakout above just the recent 2-day range, and if there's some decent momentum behind it, then we could go all the way up to 86.5 to 88.5 and possibly even 91.93. So if you're fading that breakout, you just want to make sure that the underlying environment supports the idea. So for example, if we get a breakout, but there's not really a whole lot of upside momentum to support follow through, then it can lead to a failed breakout. And that's really where it's going to make sense to short a move into the 86 half, 88 half. Otherwise, it might just be a rotational type trade. So just keep an eye on the NYC tick and the momentum situation to determine whether the short setup up there makes sense or not. On the downside, if we get a break below 69 quarter, 71 quarter, short term, that would put sellers back in control. Bigger picture, we know that sellers have been more dominant over the last few sessions anyway, and a break below 69 quarter to 71 quarter could lead to a directional move into the gap fill and the 61.75 to 63.75 initial support. That is going to be the first inflection point below the micro bull bear. That's a spot where technically responsive buyers can still be active and defend that zone on first test, at least for a rotation or a brief pause. If we slice through the initial support or eventually just balance and break below it, then the next area is going to be 56.5 to 58.5. That was the starting point of the big directional move off of yesterday's low. So responsive buyers can still be active there as well. But the more times you test a zone, the weaker it becomes and the less likely it is to result in a similar reaction. So at this point, if the buyers are really going to remain in control, then we don't really want to see ES going all the way back down into 56.5 to 58.5 because that zone may not hold this time around. So ideally, if buyers are going to remain in short-term control, then we hold above 69 quarter to 71 quarter. But worst case scenario, 61.75 to 63.75 is still a spot where technically buyers can step in, and from there, if they can get ES back above the micro bull bear, then that would confirm that the larger time frame buyers are stepping in on these lower prices, and that can still lead to a move up to 86.5 to 88.5 and potentially even higher. So right now the market is very balanced heading into the open. It can tip in either direction, and we would need to see a breakout above 78 to 80 to confirm the buyers in control. A break below 69 quarter, 71 quarter would signal sellers in control. With FOMC due tomorrow, there may not be a big directional move in either direction, right? We could simply remain in a relative balance and get another two-sided day, just kind of within the recent range, or perhaps we go up to 86 half, 88 half, fail, come back down, start balancing again, or go down initial support and then just start balancing again. So in order to get a directional move one way or the other, we will have to see some decent momentum and some follow through on the advanced decline, the other markets participating. So far, it seems like we're just going to be stuck in balance today, and that could be another theme for today is where the market is simply balancing in a range ahead of the FOMC announcement tomorrow. So those are the main ideas. That's the type of context that we're in. So be selective. There's really no need to be super aggressive at this point in time, simply because the market is very two-sided right now. Fade setups can still work pretty well, and directional setups are okay as well because the volume's high. You just want to make sure that you are on board early in the move, and not after the market's already moved 8 or 10 points and it's already a little bit exhausted into a support or resistance zone. Then you want to wait and get better location. So those are our main thoughts heading into the open. Let's see which side takes over. So far overnight, the buy side has been more dominant, but we are still stuck in a range, so it can go either way. So be flexible, be open-minded to a move in either direction. There's no need to be locked into a single directional view at this point in time because the larger time frame so far over the last 3-4 days is bearish. Short term, the buyers have been more dominant overnight, so it really can go in either direction. So there's really no need to be overly bullish or overly bearish. So those are our main ideas. Let's see which side takes over off the open, and we'll take it from there.